to Jammu and Kashmir Bank then, and the management is now joining us to discuss what the outlook is for the coming quarters. Remember, the company reported weak set of numbers for the quarter gone by, especially on the back of net interest margin expansion. But what's the outlook? Is the trend turning? That's the big question now. The MD and CEO of the company, Mr. Amitabh Chatterjee, is now joining us. Mr. Chatterjee, good morning. Shesha this side, and thank you for joining us today. And let's start by asking about net interest income, which was a big concern for the industry. The net interest margins have come under pressure this quarter. What were the biggest factors behind this compression, and how confident are you that margins will improve over the next few quarters?
Very good morning. Thank you for having me here. Obviously, when the margin shrinks this way, there's a concern for people, but I want to make it very clear that this is an aberration for this quarter. The reasons behind, of course, are we all know that Jammu and Kashmir region went through a very bad phase last year, because of which the business was affected. So we saw the opportunities in rest of India business, mainly in good corporates. We took the opportunity, but as we all know that the deposits in the banking industry at the moment, the cost of deposits have gone high. So to support that advances growth and the growth momentum, we did not want to curb. So we continued with the growth momentum, but there was some high cost deposits which we had to take to support that growth. Obviously, those high cost deposits have been shed already. So going forward, the NIMs will definitely come back to the normal levels of 3.5 and above. That will be definitely in the coming quarters, we will see the improvement in the NIMs. But this is a one-time aberration that has happened because of good reasons. I would say the strategy was to continue with the business momentum without losing the momentum, and going forward, again, normalizing the things and focusing on retail growth going forward, as the bank essentially is a retail-focused bank.
All right, understood. Morning, Mr. Chatterjee. Meryl D'Souza here, also joining in. I want to know, CASA ratios for the company has declined while term deposits have seemed to be grown. So how do you view the quality of your liability franchise today? And are there any steps? And if yes, then what steps are these that you're taking to rebuild the low-cost deposits going forward?
See, this is a normal trend in the banking industry, is it not? If you look at the reduction in CASA and the increase in term deposits in our case also, it is almost matching. So the deposits are moving from the CASA to high interest rate bearing deposits. That is a phenomena across the industry. It's not exclusive to our bank. But yes, we are fortunate to have a very strong liability franchising in Jammu and Kashmir. We have been working on this for the last 2-3 quarters, and we have been able to maintain the CASA levels above 42%. I must say that it is still 300 bips better than the average industry CASA. So this will continue, and the efforts that we are taking, they are showing results. I have seen the results coming in the last couple of months. So I'm very sure that we will be able to improve the CASA by at least 100 to 200 basis points going forward, if not within this year, in the coming 3-4 quarters. So I'm not, I'm quite confident about the CASA remaining or upward movement in CASA deposits. If you look at the in absolute terms, we have still grown in CASA. It's not a dip. But the percentage terms, it has dipped because term deposits have grown more.
Understood. So that's as far as the CASA ratio is concerned. But Mr. Chatterjee, let's also talk about provisions, because in the quarter gone by, there was a sharp increase in provisions in this quarter. What led to that, and how do we see this trend going forward during the year as well?
See, slippages have come down. NPA has come down. So obviously, this provision is something which is a positive signal for the bank. Yes, the increase in provision is essentially on account of standard assets provision. Standard assets in the last quarter, first quarter of last financial year, the advances had gone down. There was a negative growth. So there was a negative provision. I mean, there was a provision release on account of that. This for the last 1 year, we have had a very solid advances growth. So standard asset provisions have gone up by almost 60-70 crores. So if you look at NPA provision or provision on stressed assets, it has come down. But the provision has gone up in standard assets, which is a regulatory requirement.
Right, Mr. Chatterjee, that's that on your provisions. But tell us, with the transition to the expected credit loss framework now approaching, how well capitalized is the bank, and do you foresee the need for additional capital to support growth as well as regulatory requirements?
See, we are already set up for a capital raise very soon. So that is likely to happen in a couple of months. Other than that, I think we are well capitalized at the moment. The capital CRAR ratio is very comfortable for us. So yes, ECL is a concern for all banks. I mean, we are not an exception, but I believe that we will be sufficiently at a comfortable position when the ECL provisions have to be made. At the moment, I'm not in a position to give exact numbers because the model is yet not ready.
Okay, and when and where do you see the return on asset levels reviving upwards? So what will the key levers be for return on asset to inch higher?
It will come back to the 2026 levels very soon. I'm not predicting the date exactly. Maybe next quarter or the quarter next to that.
Got that, Mr. Chatterjee. And tell us, the bank has also been expanding its presence outside of Jammu and Kashmir. I want to know how important is the rest of India business to your long-term strategy, and what's your target mix between the J&K and outside of J&K?
See, there is something very specific about J&K. This geography goes through difficult times off and on, and that impacts the business. So it is essential for this bank to come out and increase its presence in the entire country. We are fortunate to be present in 22 states, and we are planning to increase that presence further, increase the overall business potential from the entire country. So from concentration risk point of view, from increased business potential point of view, it is very essential for us to expand in rest of India. And we are going ahead with that. In fact, in the next, say, 3 to 5 years, I think the ratio of branches, which is at the moment 85% in Jammu and Kashmir and 15% in rest of India, will definitely change to somewhere around 60-40 or 70-30 very soon.
Understood. So that's as far as the mix between Jammu and Kashmir and outside is concerned. Mr. Chatterjee, thank you so much for taking your time out and joining us here in ET Now and sharing your thoughts on where the company is headed going forward. Thank you for joining us today.
Thank you very much.
Shifting